everyone, welcome to Tom's Trading Room. Glad to have you back. In this video, we're going to talk about finding trades. So one of the easiest ways to find trades on the site is through the Find Trades button. You'll find that if you go across the page here, and we come across to the searchers. Go to the multi-searcher strategies, and you'll see an area called Find Trades. Click on that, and you'll get to this particular window right here. So let's say you have a stock, for whatever reason it is, that you want to look at in terms of option strategies. I'm going to show you how we do it. What I'm going to do is click on the money calendar. And the money calendar for tonight is telling me FedEx and UPS seem to be dominating the top portions of this. And so there's a 20-day trade in FedEx over the last 10 years has averaged $4.37 a share return. And that starts tomorrow, and that goes through the first week of December. So I'm going to click on that. I want to find out more information on it. So this is the last 10 years on this particular trade. And as you can see, it started off in 2004 pretty high. And then, of course, 5, 6, and 7 weren't so kind to transportations. But then all of a sudden in 2008, 9, and 10, and then also last year, had some pretty nice moves there. So between 11/11/2014 all the way until the 6th of December, we have a bullish situation occurring. So whatever your decision is and why you want to take it, I'm just showing you how we do it here. So FedEx looks pretty good. And so what we're going to do is we're going to go in and type in FDX, and we are going to use FedEx as our trading strategy. Now, if I go to FedEx, I'm just going to click on it real quick. I look here, and I see that the trend is definitely up on this particular stock. The other thing that I want to note is down here, we look at implied volatility. This is a 4-month implied volatility graph, and we are below. If you take a look at the blue line here and the red line here, we're below the average for implied volatility. So we're on the low side, the lower side. We were high a couple weeks ago, but we've dropped off since. I need to know this because up here, I want to make sure my outlook is bullish and my implied volatility is low. Because as you change these buttons, from if we're bullish with high volatility, it's telling you the option strategies that are the best ones to take. If I click on low, I can buy a call, I can do a married put, or I can do a call spread or a put spread. And so let's just simply look at buying a call option, all right? And we're going to sort this by which has the best percent to double, all right? So we got everything set up, 45 to 120 days. However, really we're probably looking at less than 45 days because Money Calendar says this is going to happen in around 30 days, 20 days actually. So come on down, take a look at this. This looks good. Let's go ahead and click on search. And this is going to bring back calls that have low implied volatility, and it's going to sort them by the trades that have the best chance of returning a double in a short amount of time. And what it's telling us is the January 2014, the 140 call is trading for 156 right now. This is the first trade, the one that I'm probably the most interested in looking at. And so I'm going to go ahead and take a look at it. And so I'm going to click on it. It's going to give me that risk graph. It's going to show me what this particular trade looks like in terms of risk and reward. So we're talking about spending $156 or $1.56 on the call option. And here is the graph. You can see what's happened here, that if we move up, and we move up, let's say we move up 5 points, we're $4.56 is what we're looking at off the trade we have here. That would put us back up near the highs of around 145 or so, a little off of 145. So let's take a look and see what that would bring us, all right? Down at the bottom, I can actually squeeze all of this together. And I can look at, on the lower side, we could call this 130. And on the high side, we can call this 145, which is our target. So by changing those, it gives me a good right hard edge to see exactly what the theoretical profit would be if we went back to that $145 area. And what we're talking about, folks, is somewhere around this area, which if we come down to the bottom of the screen, we're looking at about $350, roughly $350 return theoretically at that price, with a risk of only about $150. All right? This all started with spotting an opportunity, which we spotted an opportunity using the Money Calendar, which is in Tom's Trading Tools. And then we took that opportunity and we went to allow the tools to help us find what we believe is the best trade for this particular scenario. All right, thanks again, guys, and join me on another knowledge-based video real soon.